So this is the third quarter 2015 market report, and actually really surprised at how well the market's doing. As I've been saying the last couple months, the market's been pretty strong, but a lot of it has to do with the fact that actually Michigan is one of the strongest economies in the country right now of all the other states. Certainly they're outperforming the other states in the Midwest, and that's helping quite a bit in terms of consumer confidence, the combination of growing employment. In fact, there are actually more jobs, total jobs in Southeast Michigan now than there were even peak 2005. So we've got some job growth, some income growth, although we'd like to see more of that, but at least some income growth, and consumer confidence, because the economy seems to be moving along, particularly Southeast Michigan. So all that translates into a good baseline for housing, because housing tends to follow economic growth. It doesn't tend to lead it. It tends to follow recovery. So we've seen that all this year. We've seen it the last couple of years. So, and what's really been surprising is, in spite of the fact we've had so many sellers sitting on the sidelines because equities haven't grown enough for them to be able to sell, and credit's been tough to get, particularly for first-time home buyers, we've been amazed at how strong the recovery has been for the last couple of years. And what we're seeing now is that with equities up, sellers are starting to release inventory more and more. In most price points now, for Southeast Michigan at least, we're seeing inventories rising. In fact, inventories rising faster than sales. So sellers, as we've been saying for the last couple of months, sellers see that, and then they feel the market is a little bit slower, and values may not be rising quite as much because there's more inventories, there's more competition for that buyer. Relatively speaking, it's still very strong, but compared to last first part of this year, and certainly last year and the year before. And if you go market by market, segment by segment, the under $100,000 price range is certainly the strongest, it's most active. You'll find actually that the number of home sales have actually declined slightly, as have available listings, but that's really the foreclosure effect if you go for a trend in the last 3 years. Most recently, if you look at that price range, inventories are starting to rise, and certainly sales are rising as well. If you go to the next price range of maybe 150 to 250, the mid-price range, same trends follow. Inventory is rising faster. In fact, inventory is probably rising a little ahead of sales there. As go to the next stage of maybe 250 to 500, again, those two middle segments, they look much the same in terms of more plentiful listings. And as price ranges go up, the listing inventory pace is rising faster and faster. And as values rise, you'll see that the inventory rise is faster than sales. This year, there will be more sales overall and in all price ranges than there were last year in terms of for Southeast Michigan. But there'll also be even more listings. So again, that will make it feel like a slightly slower market. Values will tend to rise a little bit slower. At the upper end, $500,000 or above, as we've said in the prior months, that's certainly the extreme case. And in fact, values have declined this quarter, third quarter this year compared to the second quarter this year, or the third quarter this year even compared to last year, third quarter 2014. The values have actually declined a little bit. And as we said in prior months, we don't look at that as a long-term negative trend if there's a bubble for the high end or anything like that. It's just recoveries don't recover in a straight line. They recover with different bounces, ups and downs. So we look at this as a sort of a temporary down in terms of the upper end market, where supply is ahead of demand. Over the next year or so, that should be absorbed, and you'll see it come into balance. And at about the same time you see that happening, you'll probably see it get a little bit out of balance in the lower price ranges. Again, they'll turn around to give them a selling season a year or so, and they'll turn around as well. But overall, still very good numbers, very positive momentum going into 2016. In fact, as we said the last couple months, we're still seeing that same trend of buyer interest and showing activity being as strong or even slightly ahead of this time last year. So we feel like we're going into this year with two good things: buyer interest equal or more than last year, and available home inventory up. So we think that'll actually draw some additional buyers out of the market, if not this winter, then this spring. So all good news. Thanks.